Very good morning, everyone. I hope you all are good, doing well. All right. So we have something new today. You must be excited. You have seen the thumbnail, right? So this is news which we have to cover from SEBI. I'm also good. And yesterday the editorial class didn't happen because there was no relevant article. So I didn't pick any of the irrelevant articles for you, right? Today we have two editorials. One is from your Money Control. The another one is from your Economic Times. The next one, the second one is the general GST kind of thing. You all know that recently GST 53rd GST Council meeting was held. So what were some of the important decisions which were taken? We will discuss that. But before that, we have something new which you need to understand. You will learn these new concepts today of financial market. So we have a news regarding Quant mutual funds. Quant mutual fund is a young mutual fund company. Okay, so the SEBI has suspected that it has issued orders to Quant mutual fund to clarify whether it is involving in front running or not. So what is front running? What is the entire news? How is it different from insider trading? What are the implications? All these things will be covered. That's why this news is important for you. You will get to understand a lot of new concepts. So let's begin with the analysis. Audio video is all good, right? No issues? Not audible. Am I audible or not? Audible, right? The setting here is okay. There's no issue with that. There might be some problem at your end. Just check it and confirm me. All good. All right then. So you have heard whatever I told you, right? What is the news about? I just kept on speaking and didn't realize about the audio. Okay. All right then. So here we have this news, the analysis. Let's understand what is it all about, right? Now, as you can see the news, Quant mutual fund under scrutiny. Under scrutiny for what? So it is under scrutiny, for front running. So what is front running? How does it hurt the investors? Let's see. What is in the news? So the news is Quant mutual fund, which has assets under management of 93,000 crores, has been suspected of front running by capital markets regulator. Now, first thing, what is Quant mutual fund? Quant mutual fund is a mutual fund company, as you know. What are mutual funds? So it is like a mutual fund. It is young mutual fund company. Why am I saying young? It was incorporated in 2018 only. Okay, in 2018 only. So this Quant mutual fund is a young mutual fund company. Now there are allegations that it is involving in front running. So this is the introduction of Quant mutual fund. There is another thing. This is a huge or one of the fastest growing mutual fund companies. Why am I saying that? Because it has an AUM. It has an AUM of around 93,000 crores. What is this? Asset under management. Another important concept. AUM. Asset under management. What is asset under management? So asset under management, AUM. Asset under management is basically your total market value of all the assets. It might include your stocks, bonds, securities, other securities, right? So stocks, bonds, other securities, all the assets which are managed by the mutual fund. So it is total market value of all the assets managed by these fund managers or mutual funds on behalf of their investors. on behalf of their investors. So what is this AUM? Asset under management. It is basically total market value of all the assets which are being managed by the fund managers or the mutual fund managers in the mutual fund companies on behalf of their investors. So investors, you know, the clients or the investors, the mutual fund pools the money. It collects the money from all the investors and then invests into all these assets, stocks, bonds, other securities, isn't it? You know that, right? So all that pooled money which is managed on behalf of the investors, what is the total market value at present of all that assets or the money? Okay. So that money invested in these assets, what is the total market value of these assets on behalf of all the clients, all the investors? That total market value is your AUM, assets under management. Have you understood that? Understood the concept of AUM in mutual fund? Asset under management. Everyone, let me know quickly. You have understood, right? So if it is bigger, if this amount is bigger, you understand what is the implication. That means the mutual fund is growing faster. More investors are showing their confidence into this mutual fund. Therefore, they are investing via these mutual funds. So this is a good sign, you know, of growth for the mutual fund. So why are we discussing it? Because this Quant mutual fund has a good amount of good size of AUM, asset under management, right? But it has been suspected of front running by capital markets regulator, that is by SEBI. So it is now suspected of front running. So what is front running? Now you all know these are, you know, practices of market manipulation, isn't it? There are certain practices of market manipulation which are clearly stated as illegal and unethical by the SEBI, by the market regulator, right? So it involves the practices like insider trading, front running. Front running is one of them. Insider trading is different, front running is different. You must have heard about insider trading. Everyone knows what is insider trading, right? Okay, so let's understand what is this front running which the Quant MF has been suspected of involving in, right? So Securities and Exchange Board of India, SEBI, has conducted search and seizure operations on Quant MF for verifying this news, that whether it is actively involved in front running or not. Okay. No, it is not like whistleblowing. No, whistleblowing is different. Whistleblowing is something when that is different. I will come to whistleblowing. So there are whistleblowers who make those information public which are not to be disclosed, right? Or any such practices going on in the company, in the institute or entity which is not disclosed. So that is different. That is different. Front running is different. Okay. So let's discuss what is this. What is front running? See, simple. We will try to understand it via an example. Okay, what is front running? So basically, if you see the definition, when a broker, you all know that there are these brokers, right, in the investment process. So brokers exploit market moving knowledge that has not yet been made public, or when a broker acts on advanced knowledge of an upcoming trade that will significantly impact the price of an asset. What is it? So there are these brokers, right? They are working as an intermediary between the investors and these companies, right? These stock issuers, the share issuers, all these companies, listed companies out there. So what happens when these brokers, they take unduly advantage of some information or anticipation which they get about the orders or trade orders to be placed. Now, why am I saying that? Let's take an example, then you will be able to understand. Suppose there is a broker, okay? Suppose there is a broker receives an order of buying around 1 lakh shares, or it anticipates that there is going to be a huge order for some shares or stocks. Either receives the order or say anticipates that there is going to be a huge order regarding this. Say 1 lakh, 5 lakh, 2 lakh, any amount of shares and stocks to be purchased by some investors. Okay. Shares of a company, say company X, or even anticipates a big order is coming. So he anticipates, the broker anticipates, or the entity as a broker anticipates a big order coming in way. Now such a large purchase, now the broker knows that such a large purchase is going to push the stock prices up, isn't it? Such a large purchase is going to drive the stock prices up. Now he takes, or the broker takes unduly advantage of this situation. How? So instead of executing the client order, suppose the client has ordered, or the mutual fund only has ordered 1 lakh shares to be purchased. Now the broker knows that if 1 lakh share purchase is to be added in this market, that would drive the stock prices up. Anticipating the profit, what the broker does is, broker first buys these stocks or the shares for itself or for himself, considering the broker as an entity. That's why I'm saying itself. Okay. So instead of executing the client order immediately, the broker buys some of these stocks for their own portfolio, to be added into their own portfolio, right? So they, rather than executing that order of 1 lakh shares, anticipating the profit that it will come. So before this order or initiating this order, let's buy certain stocks. So the broker buys certain stocks, okay, and when such order pushes up the stock price, so before initiating this order, the broker has purchased these stocks. Now what will happen? This order gets realized, okay. So when this order of 1 lakh share gets initiated, it pushes up the stock prices as it was anticipated, right? There is a big order, so it will push the stock prices up. Now what happens is, now they knew it, that the stock prices will rise due to this big order, okay. It affects the profitability of all other investors. How? Now they will sell it immediately as and when the stock prices rise. They will sell these stocks which they purchase. The broker will sell the stock which the entity or the broker purchased, right, to book the profits. So this is how unduly advantage of any information which was not publicly made, the broker got to know this thing, that there is huge investment order coming, and took unduly advantage of it, purchased these stocks initially before initiating the real trade order, and then as and when the prices shooted up, sold all these stocks. It affects other investors negatively. Why? This will increase prices. So for other investors, prices will increase. Okay, we will see what will be the impact. But first, let's understand. Mast plan hai. Okay. Yes. So have you understood now? I think this example is easy to understand, right? So there is a broker, anticipates or receives a big order. Before initiating the big order, itself purchases these stocks, because now the broker knows that this big order is coming, so it will shoot up the stock prices. And when the stock prices shoots up, the broker sells them immediately. That affects the prices for other investors. That's why it is a market manipulation. I hope you have understood it very well, right? So this is what front running is. Now remember, front running, insider trading, all these things are market manipulation practices. They manipulate the market. They prevent fair competition in the market, fair chances of profits in the market. That's why these are illegal and unethical as per SEBI's guidelines. So this is what front running is. And for this practice, the Quant mutual fund has been suspected that it is being involved. Now let's see what happens further. Okay. So the process is going on. Whether the company is accused or not, we cannot say that. Okay. So that is the thing. We will do the differentiation between insider trading and front running. So first you have understood this front running, right? Now, is it different from insider trading? Yes, as I told you. These all are these, forms of market manipulation only, but they are different. What is insider trading? Insider trading is when you get some information which is, very, say, from inside the company. You get to know that information because your position inside the company, or you know someone who is inside the company. So that information which is not to be publicly disclosed, not yet disclosed in public, you get to know that information, and you say any new business deal, any acquisition, any merger by the company, which the public does not know, but the insiders of the company know, right? The people actively involved with the company, they know that. Any such information which can affect the stock or share prices of the company, you get to know such insider information and then you trade accordingly. That is insider trading. Have you understood that? So this is different from front running, right? Front running is the broker taking advantage when he anticipates or gets a big order. So being a broker, that position is leading to unduly advantage. Insider trading is different when you get some inside information of the company. It may be of any profit company is going to make, any merger, any acquisition, any new business deal, anything. On the basis of that, you try to trade in the market the information which the public does not know. So it is unduly advantage. You erode out the fair practices in the market via doing insider trading. Right? So is this clear to you all? Difference, we will see what is this exactly. Yeah, so I have written that it has not been made public yet. What is the issue with that? So this information has not been made public. The broker only knows that this kind of profit is going to arrive in the market. Okay. So is there any difference between insider trading and front running? Yes, as I have discussed with you. So front running and insider trading are both illegal practices. These are forms of market manipulation. They both are illegal and unethical in the financial markets, but they differ in their nature and type of information used. They differ in their nature and type of information used. How do they differ? Although I have discussed with you, but let's see the definition on board here. Insider trading involves trading based on material, non-public information about a company. This confidential information, so it is based on some information which is confidential for the company and you get to know that information. It is not on anticipation or big trading order received by the broker, as in the case with the front running. Are you getting my point? Are you able to understand the difference, right? So insider trading involves basically material or non-public information about a company which is confidential, and it is often obtained from within the company. It can significantly impact the company's stock prices once it becomes public, but you get to know that information before it is becoming public or before it is disclosed to the public. So now you know what the stock is going to perform. Is it going to lose or is it going to gain? That's how you trade and that's how you manipulate the market. Your decision by such investors can manipulate the actual loss and gain to be made by the stock in the future. Also, it erodes away the fair opportunity available for everyone to gain from that price rise if it happens. Right? So what kind of information this can be? It can include certain reports of the company, merger if it is going to be, any acquisition which the company is planning to acquire, major business developments in case of companies, any deal upcoming for the company, major deal, or any other significant corporate event which can have a substantial impact on the stock prices of the company. isn't it? So this is insider trading. Now I hope you all are clear with the difference between these two market manipulation terms, activities. What is front running and what is insider trading? So these are different in nature and their types, right? Okay. Now, how does front running impact the investor? Why are we worried with this? So, insider trading impacts hugely. So, how front running impacts the trader or the investors, other investors in the market? Why SEBI is worried for such unethical practices? What happens is, say, front running negatively impacts the investors in several ways. It has negative impact on the investors. That's why the financial market regulator or the SEBI has been keeping eye on these activities. When intermediaries front run, these brokers, they indulge in front running activities, for large orders, it causes stock prices to move against the interest of the investor. Now, since they know what is going to happen, they immediately sell or buy these stock prices. So, prices move against what was a general anticipation. Now, what was the general anticipation gets hurt, right? So, it affects the interest of the other investors, which did not know about this phenomena. Say, if a mutual fund, for example, plans to buy a large number of shares, okay, and intermediary via which the mutual fund is going to place that order, that broker or intermediary knows this thing, right? Now that intermediary involves in front running by purchasing the shares first. So the broker knows that this particular mutual fund company is going to place a big order that will shoot up the prices. So let me purchase the stocks first. So the broker purchases these stocks, the price of the stock increases even before the mutual fund can complete its purchase. Right? So the prices of these stocks, they increase even before the mutual fund company which was planning to do that trade can actually initiate that transaction, right? This results in mutual fund paying higher prices, isn't it? And when your prices they increase, it might affect your returns which you are expecting out of those stocks, yes or no? So actually, before the mutual fund was able to initiate that entire transaction to buy or to sell whatever it is planning to do, prices increase. Suppose you want to buy, so now you have to pay more. That can affect your return as well. You might not get a huge return comparatively if this front running event did not happen, right? So this is how it negatively impacts the other investors. Let me know, have you all understood the severity of this kind of practice, these kind of practices? Understood? Why are we concerned? Not we. Why is SEBI concerned about these things? How do they stop this? I'm coming to that. Understood? Now, good question. How do they stop this? So, SEBI has been keeping an eye on all these market manipulations. This is not first time. There have been many cases. The recent one was, I think, if I'm right, it is related to Axis Mutual Fund. Okay, related to Axis Mutual Fund. Recently, it was also recognized by SEBI. Okay. Now, what the SEBI does is to tackle all these things. Now, once you know that this particular broker or company has been involved in front running, they impose monetary penalties on the brokers, on the investors, whosoever is involved in that process. Okay, they impose monetary penalties, huge penalties. So that's how it tries to stop them from doing all these activities. Understood? Right? So recently, as I told you, Axis Mutual Fund was one of the recent examples. You can go and read about the case study you can refer to, right? Axis Mutual Fund. So all these things, SEBI is continuously keeping an eye over these market manipulation practices. Yeah, there are all these things, they also give reward, they also impose penalties. But this is how it is related to front running, okay? We have a lot to discuss regarding this, but we should stick to the topic, okay? So I hope you all are clear with this news. That's why you saw in the thumbnail. So this is important. You have got to know what is asset under management concept, right? What is front running? How is it different from insider trading? All these things. I hope it was useful for you. Now, moving ahead to another editorial which we have for today's analysis. Okay. Another editorial is related to your GST Council's meeting. So you all know on 22nd June, 53rd GST Council meeting was held. Whenever GST Council meeting is held, there are certain decisions which might be taken by the Council regarding GST Act. Okay, you all know what is GST. I have taken an entire class in editorial regarding GST, its structure, its legal provisions, right, constitutional provisions, all these things, types of GST, IGST, CGST, UTGST, all these things, right? We have discussed what is GST. So you already know now that GST is a consumption based tax, isn't it? Are you able to recall that class? So we have discussed GST in detail. So you know what is GST, and now since recently meeting was held, what decisions were taken, so you will get to understand new concepts now. That's why I have picked up this article. You will also be updated about these new decisions which are taken. Also there are news, there is news. I am not saying the fact, I am saying there is news going on that the council is planning to include petroleum and diesel under the GST rate. Let's see what happens. It is not decided yet, it is only in the air. Okay, it is only in the air. We don't trust upon the rumors, right? So let's see what happens. But what has been decided, let's discuss that first. Okay, so this has been taken from your Economic Times. This column was there in today's Economic Times. So GST and the easing compliance. This title has been given to this article because these decisions, as discussed by the author, they are a welcome step. They are supposed to reduce the compliance burden with the GST council making new decisions in this regard, right? So let's see how these decisions have reduced the compliance burden on the individuals, on the companies. Okay, so now what is it? What all has been decided in this recent meeting? I have chosen these decisions very selectively, broadly. Okay, we are not discussing what they are planning or which the council has not decided, what is going in the air. We will discuss what has been decided in the council. Okay, now GST council has taken several compliance measures. So what these decisions are revolving around? Compliance measures. If you remember, in one of the editorial classes, we have discussed that tax compliance should be easy. In those classes, I have also told you what is the Laffer curve, isn't it? Laffer curve concept. We have discussed all these things, that the rates should be moderate to increase revenue collection, all these things. Also, I have discussed with you canons of taxation. If you remember, canons of taxation. Virtue. Canons mean what virtue a tax administration or tax policies of an economy, of a government should consist of. One of the canons which we have discussed is canon of ease, right? So you can use these terminologies in your answers. That would make your answer more effective and stand out from others who are not using these jargons, right? Canon of ease. What is canon of ease? That this process, entire process, be it direct tax or indirect tax, any tax, the process of complying with the tax guidelines, process of registering with the tax authorities, process of filing the tax returns, process of claiming the tax deductions, all these should be easier, right? Then you will be able to increase your tax revenue collection, because then if it is easy to comply with the tax rules, people will at least default less, or they will disclose their income, they will evade from taxation lesser than what they used to be. right? So GST Council has taken several compliance measures to ease tax litigation and enhance business operations across sectors. What are these decisions? We are going to discuss them. First is interest penalty waiver. Interest and penalty waiver. So these, are aiming to ease the tax litigation as well. What is tax litigation? Tax litigation. You know what is litigation? When you file for some dispute or for some issue, for some grievance, right? So tax related litigations, say there is a dispute between an individual taxpayer or a company as a taxpayer and the tax authorities. So you file a complaint, right? So these litigations are increasing. You have burden of tax litigation. You already know about the Indian judiciary, that Indian judiciary is facing a problem of rising litigations, isn't it? Yes or no? Now we have something which is tax litigation. So how can we reduce on these tax litigations? How can we ease the business processes for the business operations in India as well? So we are planning to find a way in between which helps the tax authorities, which reduces the burden on the judiciary, as well as which helps the individuals and businesses to grow. GST should not be an impediment for them, an obstacle for them, rather than, a mechanism of growing further. This is it. Now I'll be discussing all these points with you. So now you will understand what these decisions, the background of this decision is. Okay. So interest and penalty waiver. First thing, one of the things decided by the council is the council waived interest as well as penalty. Interest as well as penalty for all the demand notices. Demand notices. Now, what is demand notice? One concept which you should remember here is what is tax demand? What is tax demand? Only then you will be able to understand this information or this news. What is tax demand? Anyone knows that? Tax demand means what is your remaining outstanding liability of the tax to be paid to the government. Okay. Suppose you were to pay 50,000 rupees as tax, but you didn't pay it. So tax demand by the government is 50,000 on you. So tax demand is the amount outstanding which you are liable to pay to the government. You have not paid that. That is tax demand. Understood? Right? So the decision says that, council has waived the interest on such tax demand, whatever interest accrued to that tax amount, as well as if you defaulted on paying them in the time being stipulated by the tax authorities, so there must be some penalty charged upon that person or company, isn't it? So the council has decided to waive off any such interest or penalty for all the demand notices, such tax demand notices issued by the tax department, issued during the financial years 2017-18. So it has been implemented retrospectively. Okay, it has been implemented retrospectively with effect from the previous dates. So what are the previous dates? It is applicable for all the tax demand notices issued by the tax department for financial year 2017-18, for financial year 2018-19, and for 2019-20. All these tax demands will, the interest and penalty charged on these tax demands which have not been paid yet are waived off. Okay. This applies to cases where taxpayers pay the full amount of tax raised in the notice by 31st March 2025. However, this waiver does not cover the willful defaulters. Tax maaf nahi hua hai. Don't confuse the interest and penalty waiver as tax waiver. No, that is not something which you expect from the finance minister to declare, or which you expect from the income tax department to go with. This is not prudent for any economy. Tax waivers are never a solution. Remember that can harm the economy in a long run. So these political stunts, before elections, political parties promising farmers to waive off their taxes isn't a good idea. Rather, you are disabling them from further tax paying possibilities. Yes. So tax waiver is not a welcome step, and that is not the decision. Focus on what I am saying. Complete the news first. This applies to cases where taxpayers pay the full amount, whatever was due during these financial years. If you pay the full amount by this date, 31st March 2025, by this date, if you pay the full amount, then you will not be required to pay the penalty which has been charged because your delay in the tax filing or payment of the tax liabilities, or any interest which accrued on it. So it is only the penalty and interest on that tax demand which has been waived off. Tax amount is not waived off, remember. Also, it is only waived off if you pay the entire tax demand, tax liability of yours which is impending by 31st March 2025. Have you understood this, right? Also, it is not for willful defaulters. Who are the willful defaulters? Who default willfully. You know the names. Recently, they have been in news. I won't elaborate much about them, okay? You know the names. Who all are the willful defaulters, the infamous willful defaulters in India, right? So it is not for willful defaulters. It is for those defaulters who defaulted due to certain reasons, right? Otherwise, everyone will default willfully, and then you claim these deductions on interest and penalty. That is going to cost hugely on the tax department, right? So you all are very intelligent enough to understand who am I referring to. So this is clear, okay? First decision, interest and penalty waiver. How is it helping easing the compliance? Now, since if you were afraid of paying these huge penalties and interest rates, that's why you are unable to clear all these tax dues. Now, it would incentivize all these defaulters to pay back their tax amount and do not pay the penalty and interest. So, this is a genuine step taken by the government. I would welcome that, and you would also welcome that, isn't it? It would increase government's revenue collection as well, and further it would decrease tax evasion. Clear? Now, second step which has been taken is biometric based registration. Biometric is being broadly used. Now, you know, there was recently a news for government officials that if you enter, say if your office time is 9 a.m. and you enter by after 9:15, that would be considered as a half day, isn't it? This was the news, right? If I'm correct. So, biometric registrations where they have the employees will have to abide by it. Actually, you should. That's how only you will be able to capitalize upon your demographic dividend, isn't it? You will be capitalize upon your working efficiency, productivity of the labor of the employees. So now we have something related to biometric in GST as well. What is it? That all the registrations will be biometric based, so as to avoid any fraud kind of thing. So biometric based registration, the council approved pan India implementation, entire India implementation of biometric based registration to weed out fake registrations and fake credits. Any fake registration of GST account. You know why people create in the GST classes? Tell me if you guys remember. I have discussed with you input tax credit, that all the taxes which you pay on during the process on purchasing inputs are paid back to you, are credited back to you, and you can utilize them in your further GST return filing, okay? Isn't it? So what happens is there are a lot of fake registrations, GST registrations. People who do not do or operate business, they sometimes, register to get benefit of those kind of thing. So these kind of things are going on. If I have to give a practical example, suppose you have to purchase an AC, an air conditioner, or say a luxury car. You don't have a GST registration, you are not engaged in any such activity. You try to buy it from some other account who is registered with the GST portal. to get the ITC and produce it as, you know, something you are using for inputs, so that you get the ITC, input tax credit. So effectively what you pay becomes much lesser than the market price. This is what is going around. See, this is India, okay? We find ways. So this is not something very uncommon in India. You know, wherever you have law, you have these loopholes. There are people waiting to exploit those loopholes. So this is going on. It will solve this problem, okay? So another decision in the series. Again, a welcome step. Nothing to be worried about, these kind of decisions. Next step is amendment in Central GST Act. So the council has recommended to insert a new section. Section 11A. Section 11A. The council has recommended to insert this section into GST Act. Why? What will it do? So this section 11A to be inserted in GST Act as recommended by the council, it will allow both the central government as well as the state government to waive off GST not paid due to ambiguity of law. Again, easing the compliance burden on the people. It will give power to central government as well as to the state governments to waive off any GST. Now this is the tax only, not the penalty. So this is a very, very genuine step taken by the council. Entire GST or tax demand is here. To waive off that entire tax demand, but condition applied, which is not paid due to ambiguity of the law. If there is some ambiguity in the law, or there is this, you know, ambiguity in general practices which the business follows, in that case you can waive off. But I think this is something controversial. Agree or not? It can be misused. What do you mean by the ambiguity? Anyone can claim that this default has arisen due to ambiguity of law. Agree or not? What is your stand on this? I think this is something which we need to look upon, that how it unfolds. I don't think it will be used, rather it will be misused further. Ambiguity is no proper information, lack of information or doubtful information kind of thing, okay? When there is no crystal clear information regarding something. Confusion. So I think it is something controversial, but yes, this has been decided by the council. Let's see if it is inserted or not in the GST Act. Isn't it? So I think that it can lead to much misuse by the customers. Because these, you know, these are vague terms, ambiguity. It is like those default clause provided in the FRBM Act. If you remember the class I have discussed with you, that although center is required to keep fiscal deficit as 3% of GDP, but there is a default clause inserted later into that act, which enables the government to breach that target during any natural calamity, any unprecedented reason, all these. The government can breach it anytime and can, you know, not deliberately. There can be some events which are not so severe but can be attributed that, okay, this is something bigger. So you have instances of people exploiting such default clauses. Even you have instances that government has not been able to reach that 3% of GDP fiscal deficit target. So these certain decisions are somewhat controversial. We just want to discuss, that's why I'm discussing with you all the pros and cons. I don't want you to just look at the thing and mug it up. Try to think whether this decision is good or bad. Increase your thinking capacity, okay? That's why just discussing. No one knows what is going to happen. Next step. Monetary limits for appeals. Now this is another welcome step. Step taken by the council. As I told you, litigation process needs to be eased. There is a lot of tax litigation going on that is causing burden on Indian judiciary. So council has decided to place monetary limits that you can only go with this much amount. If the case deals with this much amount, you can go with this court, not more than that. Okay. So placing monetary limits will specify, will bring clarity that you can go for this case to this court, not beyond that. Okay. Also dividing these litigations to be, say, some cases will be referred to High Court, some to the Supreme Court. So the pendency, the burden will also be divided. What are these monetary limits? So to reduce litigation, council has set monetary limits for filing appeals by GST department as, remember these, 20 lakh, you can be asked a question regarding this, 20 lakh for GST appellate tribunal. Any case which has to go to GST appellate tribunal can be up to 20 lakh rupees. Any case to be filed by GST department which goes to GST appellate tribunal has to be maximum of 20 lakh rupees. Okay. Cases up to 1 crore rupees can be referred to high courts, relevant high courts. Okay. Cases up to 1 crore rupees can be referred to high courts, and cases up to 2 crore rupees can be referred to Supreme Court. So remember this, 20 lakh for GST appellate tribunal, 1 crore for high court and 2 crores for Supreme Court. This monetary limit on litigation has been placed, so it will ease the rising burden on judiciary, confusion in litigation, all these things. It is another welcome step. It is another welcome step, isn't it? Right? This is the thing. Now, another thing, the GST amnesty scheme has been extended further. Okay, GST amnesty scheme extended further. So what is this GST amnesty? It basically provides relief to non-filers of returns for specific years. So it was originally for initial years after GST implementation, but now it has been extended further to provide relief to taxpayers who missed filing their GST R3B. As we have discussed in the previous classes, this is the form which you have to file, GST return, right? GST R3B returns for previous tax periods. So what happens under this GST amnesty scheme is, if you defaulted, if you could not file these GST R3B returns for your previous tax liabilities or tax periods, government what does is tries to provide you certain relief from the penalty or interest if it is charged from you for this delay. Providing such penalties is a part, or such reliefs is a part of your GST amnesty scheme. So it has been extended. It is a part, providing relief is a part of this GST amnesty scheme. Right? Have you understood this? Okay. So the author says these all are welcome steps, but real reform would be collapsing the rates and expanding the coverage. At the end, the author of the editorial says, we are welcoming all these steps, but we are looking forward to such decisions which reduce the present GST tax rates which are there. Okay. Also expands the coverage. Now you are again reminded of a concept which I discussed with you here. Which is the concept? Which is the curve? Let me know quickly. When we say that rates need to be cut down in order to expand the coverage or revenue collection of tax, which is the concept I am referring to? Laffer curve. Everyone remembers that curve? Laffer curve? Very good, right? So in Laffer curve only we have seen, if tax rates increases, revenue collection falls, and if tax rates fall, say if it increases after a certain point of time, revenue collection would start falling down. So you should identify what is that maximum point for your economy up to which rising tax rates can be absorbed without compromising upon the revenue collection. So that's what author is suggesting, that you need to cut down the rates and enhance the coverage. Although GST is performing well after its implementation, it is continuously being one of the top 3 largest contributor to tax revenue receipts to Government of India, but still we need certain reforms to further expand its contribution and help government in fiscal consolidation. So you can relate these concepts, these decisions directly to fiscal consolidation. If tax burden is eased, tax compliance is eased, people will reduce tax evasion, tax avoidance. That would generate more revenue sources for the government. Government will be able to perform well on its fiscal front. That would ease the path of fiscal consolidation for government, when on the entire world you are having these countries like USA which are also not performing well on fiscal consolidation, which we have discussed in the RBI annual report. Right. So this was the analysis. I hope you found them very interesting and useful. The first one, Quant MF, we have discussed what is front running, what is the company suspected of, what is the issue, how is it different from insider trading, how negatively it impacts the investors or the share market. Next, we have discussed the recent decisions taken by the GST councils, important decisions, right? I hope these 2 editorials are useful for you. Any doubts if you have from today's editorial classes, you can ask me. I'm waiting for your questions. Yes, khatam. That is it for today's analysis. If you have any questions, I'm waiting for your questions. You can ask me. Any doubts? Understood? हाँ, front running subject ही होता है. Front running is even in index funds. Okay. Understood? All right. So since there are no doubts, thank you for being focused. Have a very good day. I'll see you in the next class. Thank you so much. We will discuss these books for economics and finance. See, I would suggest not to go for books. This is my genuine suggestion. Just try to find out some relevant content which is relevant to your questions being asked and syllabus mentioned for the examination. Going behind books is something which, is time taking and not productive as well for competitive examination. It's my personal experience. Books are more relevant for your academic examination. So you can get notes whichever you are referring to. You have notes of CrackGradeB as well, right? They are well updated, very well prepared. I'm not doing this due to some intention, okay? Just a genuine suggestion. If you go behind the book, you will not be able to cover the entire book and revise that thing within the stipulated time. So just go beyond what is relevant, what all topics are being asked, what are mentioned in the syllabus. Try to find out them rather than finding out the books. That's why I have an entire list to suggest you books, but I don't do that even to the UPSC aspirants. Why? I don't want you to waste your time. Have you understood my suggestion? Yes or no? Shubhodeep, right? So newspapers today covered were the Quant MF was taken from Money Control, and the next GST article has been taken from Economic Times. You can go and read it there, okay? Understood? Any further queries? All right then. Thank you so much. I'll see you in the next class. Have a good day.